Business Morning. For our next conversation now, a World Bank report on migration and development shows that Nigeria received over 40% of sub-Saharan Africa's share of remittances, totaling $540 billion, representing a 1.6% decline. And in 2019, with a total of $558 billion, but higher than expected considering the pandemic. Joining us now is Mr. Oladipo Ajayi, head fixed income at Chapel Hill Denham. Thank you for joining us on the program, Mr. Ajayi.
Good morning. Thank you very much for having me on this morning.
Good morning. Good morning. So, looking at this report, was this a less than expected decline? Was it deliberate, and what were the factors that actually led to this?
Yeah, to be honest, I think it's actually a surprise figure. It was actually less than expected. The expectation was that it's going to decline by close to about 7.5 to 8%. And the expectation was that we're expecting about $508 billion compared to the $548 billion that we saw in 2019. And one of the reasons why the expectation was that way was because of the pandemic that happened last year, and considering that a lot of countries were shut down for an average of 2 to 3 months. So you weren't expecting a lot of activity, and that will actually spur remittance of flows to destinations that we have, like what we have seen. So it's actually surprising, because compared to what we're expecting 508 billion. What we saw was about 540 billion based on the reports that was released by the World Bank. So it's actually a very surprising figure.
So remittance inflows rose in Latin America, the Caribbean, South Asia, and the Middle East, as well as North Africa. What's the explanation for this?
I think for that part of the region, I think one credible explanation that you can actually mention is the cost of remittance. When you look at those area highlighted, if you look at the South Asia, the average cost of remittance is about 5.8. If you look at the other part, is actually about 5%. But if you look at sub-Saharan Africa, the average cost of remittance is about 8.5%. So when you look at some of those things, it's actually a deterrent to actually remitting funds. And on a lighter note, if you check Nigeria, for instance, we saw us declining seriously, and by about 27.7%. And if you look at that figure, I think one of the things that you can actually say led to that is because there are other windows that people actually leverage that is not accounting to our own coffer. For example, a lot of people were doing more like a P2P movement directly that does not warrant the funds leaving the offshore to come into our market. And I think that's what necessitates why the CBN actually came up with that incentive to actually reduce the cost of remittance by giving a $5 for every dollar that you actually remit into the country. So with that, the CBN feels that will go a way in reducing the cost of remittance and also spur action in that window.
All right, Mr. Ajayi, the company income tax for the first quarter in 2021 shows that Nigeria generated the sum of about 392.8 billion naira. This represents an increase of about 971 billion naira compared to 295.7 billion naira recorded in the corresponding quarter of 2020. That's a 32.82% increase compared to the 294.72 billion naira generated in that period. Would you say the tax dragnet has been expanded?
No, I got doubt. I'm not sure the tax dragnet has been expanded. And I think exactly what happened is because most of these companies increased the cost, the prices of their goods and services. So as a result of that, that necessitates a better bottom line than what we saw last year. And as a result of that, that's what actually led to the increase in the tax remitted to the federal government. So it's not a function of volume. It's not a function of the fact that we've been able to capture the other more people into the tax nets is basically as a result of increase in prices that actually increase the bottom line to most of these companies, and also trickling down to the government as in form of tax payments.
So is this increase in prices what is also responsible for the breweries, the bottling and beverages sector generating the highest amount of company income tax for that period?
I think so, exactly. Because if you look at Nigerian breweries, for example, Nigerian breweries grew their revenue by about 27% and grew their bottom line about 39%. For Guinness grew their top line by about 20% and grew their bottom line by 35%. The revenue growth that we have seen is not as a result of the fact that there has been increase in the volume, but if you notice critically, there has been increase in prices of some of these products in the market. If you take, for instance, if you look at the retail price of a Coca-Cola drink, as of last year it was for 100 naira per bottle, but as we speak now it's about 150 naira per bottle. So that shows like about 50% increase in price of products. So as a result of that, you expect that to lead to increase in revenue, and as a result of that, also impact the bottom line positively.
All right, moving to the fixed income market now. The CBN offered some instruments, a 91-day, 182-day worth 117.56 billion naira, and it was oversubscribed in spite of the liquidity squeeze. Would you say investors are satisfied with the yields in the market?
To some extent, if you look at where we're coming from and where we are today, if you look at as of December, where some of these instruments, they are actually trading less than 1%. And when you're looking at effective yield of a 9.75 bills, it gives you a double-digit return. So a double-digit return to most people is actually a very nice place to actually put their funds in such a time like this, when there's no clarity in the market, policy directions are not totally clear. So instead of people risking their fund, they tend to put it in a safe investment like treasury bills. And as we speak, a double-digit return in that pair is not a bad one for everybody investing.
So there was a lot of cherry picking by investors in the treasury bill secondary markets, leaving it bearish last week. What's your outlook for the week?
For this week, we expect a lot of actions at the beginning of the week, and considering the result of last auction, a lot of people lost out in the auction. So you expect most of these people to come to the market to actually cherry pick. But aside that, we don't think there's anything that is in the market to actually any sentiment to drive the market positively, because there's a lot of there's debt of liquidity in the system, and that will not actually create activity in the market as expected. But just that those people that lost out in the last auction, we expect them to come to the market to actually cherry pick across maturities.
And the MPC is just about a week. How do you see it driving the markets? What's your expectation?
Yeah, this week we're expecting bond auction, and the bond auction will actually also impact the market, because as a result of bond auction, we will not see much activities until Wednesday when the result is out, because that will channel the new course of the market for the short term. And in the same vein, the MPC is for next week. So a lot of people will be very quiet because analysts' opinion is that there's very likely that we might see rate hike in the region of 50 to 100 basis points. If you look at the last MPC meeting, we saw 3 people that voted for rate hike, and 2 people voted for a 50 basis point, and 1 person voted for a 75 basis point. And if you check the market dynamics as at that time compared to now, you would have seen that yield in the fixed income market has moved close to about 200 basis points from where market was actually trading at that time. So as a result of that, we think the MPC will likely want to regularize the market by actually pushing the yield the rate up a bit.
All right, thank you so much, Mr. Oladipo Ajayi, the head fixed income at Chapel Hill Denham, for sharing your thoughts with us this morning. Well, talking about the markets,